Good morning. It is January the 2nd, 2018, and time to kick off another trading year. We had a good year in 2017. We expect to do better in 2018. At least that's the plan. I hope everybody had a joyous Christmas and wonderful holidays. I did. Had some great time with my daughters. Picked up my second Newfoundland for a month from my youngest daughter, and Charlie's already customizing my backyard. He's very, very good at rearranging the soil in different places and having themselves a ball. And we've had a very, very cold snap here. We're -3. Feels like we're up in Minneapolis or places like that. Daytime highs of 8 to 10, but that's behind us. We'll be warming up to 40 degrees come the weekend. So we've had a bit of winter. We burnt about a rick of wood with the girls here. So it was a good vacation. I hope y'all had that time too. We'll start with our customary disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, the broad secular trends that look to continue in 2018, the dollar and treasuries are pointed lower. I believe equities are minimally sideways. If the market truly does reflect excess right now, we'll be in a bracket for a while as stock prices wait for earnings to catch up. But equities sideways to higher. I believe that's going to be a trend that we can deal with. Crude, they've moved the floor up, so a bracketed market. And we were looking at 45 minus, so might even be higher, might be 55, but we'll make it 50 minus, 60 plus. Pipeline blown up in Libya and the unrest in Iran, with Iran probably the biggest factor right now. Gold, you can make with higher interest rates, you can make a case for lower. With Bitcoin, the prospects of war in the Middle East, inflation coming back faster, you can make a case for higher. So my guess is we're going to deal with a bracketed market. And I think the biggest unknown on gold is the influence of Bitcoin. Will it pull or take the market higher? That's a tough read right there. So dollar, treasuries lower, euro, equities higher, crude in a bracket that's probably moved higher, might be a 55 minus, 65 plus. But seeing as how we're over 60, it's pretty safe to make that call right now, 60 plus. Gold, bracketed market. Worldwide events, inflation, etc. will probably give us a little more clue as to what's happening there. So, starting out the day right now, you can see that resistance really does begin at 124. So, aggressively 27 to 31, sell 1, 3 to 7, sell 2. We have news today, PMI manufacturing, that doesn't get a lot of play. In the United States is at 55. It is our only news today. ADP, non-farm payrolls, FOMC minutes, etc. come out this week. So we've got some news that can move the market coming later in the week. On the buy side, 21 to 25, buy 1. I think pretty good support, 16 to 20. And then 13 to 17 for buy 2. I'm going to change the color. saw some of the snowfalls along the Great Lakes up there. Amazing, 60 inches plus. I think the biggest snowstorm I've actually experienced has been maybe 18 inches outside of a ski resort. That'd be fun shoveling that, wouldn't it? Okay, looking at the 30-year. $20 to 24, number 1, 27.31, sell 1, 3 to 7, sell 2. On the buy side, 8 to 12, number 1, 1 to 5, buy 1. And like 25, 29, buy 2. Okay, gold's over 1,300 bucks. And I believe the last high on gold was, what, 65? Yeah, 62 anyway, above that. Pretty clean break in the market right here at 1320. It's coincidentally a low volume number, but we've got $2.50 range on this market. So last rotate up was 1314. So 1314 to 1320 structurally is where we would look for resistance. And right here we are. So we'll make 14 to 16. It is resistance. It does look higher. Sell 1. 19 to 21, sell 2. On the buy side, the breakout came from 20, so we'll make 9 to 11, buy 1. First trade should be to find a place to get long to see if we can take out 1315. And then 4 to 6 for buy 2. Yeah, Charlie and Henry have done such a job on my backyard that I'm going to have to resod in a couple of places come spring. Hopefully we won't get any moisture as long as Charlie's here. He's pretty good at making mud holes. But in spite of all that, he really is a neat dog. Okay, the euro has taken off, and if we come back and look at our F1 screen, you can see that we're higher than we've been in 3 years, they say, if I remember the article correctly. So dollar weakness is what they're attributing the strength in the euro to. It has to make Mario pull out his hair. They want the euro lower so they can sell more goodies outside of the EU. So 21.25 to 35, sell 1. 45 to 55, sell 2. Quite often the euro makes its high or low in the Globex session. Why is that? Because the market starts in London, Frankfurt, Paris time, and the big money has cut the rallies or supported the market, and that's where we find ourselves. So right now, obviously, 121 is going to be buy 1, stops below 121, and then 120.75 will be buy 2. Okay, we've talked about this for years. The best way to take down Iran is through an internal revolt or uprising. When they were doing the polls back in 2009, 2010, when the United States neglected, actually encouraged the current leadership to stay in power, help them. The biggest negative I saw that came out of that was, even with a new regime in place, the Iranian population still wanted the bomb to protect themselves from the Sunnis. And so that's the problem that we face. But a peaceful regime heading Iran would be a lot easier to deal with than what we have at present, that are the biggest fomenters of terrorism around the globe at this point. So a Libyan pipeline was blown up last week, and that took us up, started us up, and then the Iranian, I think that started last Thursday or Wednesday or Thursday is when it started, has added to the buying. So we've got right here, you can see 60 is going to be pretty good support. So 60 to 60.25, buy one, first time down. 60.50, 60.75, sell one. It could be easily 60.75, 61, and 61, 61 and a quarter, sell two. What's interesting when you look at revolution or revolts around the world is, if you keep the people's bellies full, they'll put up with a lot if you feed them. But if conditions are terrible and they're hungry too, that's when you can start to lose control of your country, and you see it happen time and time again. So right now, there are people that are willing to stand up to power and risk their lives. The rumored that a lot of the Iranians' leadership families have been flown out of the country as they deal with this particular crisis. So we'll have to see what happens. But if you wanted to get rid of the Iranian problem and their terror and all the trouble that they're causing in the Middle East, you would encourage an internal revolution or revolt in every way possible. Well, folks, I blew it. We've been talking about 2,700 for a long time as the high for the stock market for 2017. And I thought we would rally into the close on the 29th and make that number. I blew it. We've hit 26.98, and then the market started to sell as traders booked profits at the year end. Now, has anything really changed with the market? Not really, from my perspective. The issue always is, does the market have to break to correct excess, or can it move sideways to correct excess? And in my experience, especially with the stock market, it can move sideways to absorb excess. So stock prices head sideways until earnings per share catch up. And I think, everybody asks what's different this time and what holds the market up. But what's different is that we averaged 1.5% growth for 8 years. I think we only had one quarter in those 8 years where we had 3% growth. And so you've got an economy that's been on hold. What I see with the local entrepreneur class here in Wichita, which I have access to, a lot of people that have done a lot of business development, not necessarily in the restaurant, but on the retail side for the most part. various endeavors, is that they kept their current businesses going. They were operating out of fear. They were going to maintain what they had. They had a lot of plans that they'd like to do to grow and expand their business, but they didn't do it. And when Trump got elected, I saw those plans being dusted off. And so it's my contention that the economy is a state of mind, and right now that state of mind looks pretty positive. So very easy to see a sideways market for a while until I see the effects of the tax changes. But when a new policy kicks in, it's 15 to 18 months before you start to see a lot of growth. So January, make it 15 months, would put us into the March, April, June, July. So we might be in a trading range until that time with an upward bias. So we'll see if that actually happens. Resistance starts at 85 this morning. 85 to 90 is resistance. We've got volume right up here at 87, so a structural sell, limit sell, would be right here at 84. Longer term, the structural sell would be at 86.50. So 84, 86, sell 1 based on structure. 89.91, sell 2. On the buy side, they make us pay up. So a buy at 79 to 81. I like the long side first. See if we can get through 85 to 90. So there's your limit buy right there. And then 74, 76. Give it a little bit of room. There might be stops. Well, there will be stops that it might be, and we have that single print right there. So try to pick up this area right here. PMI manufacturing 55.0. The big news, we have ISM manufacturing tomorrow. Most of the news comes in on Thursday. Then we have non-farm payrolls on Friday. And it's going to take a while to get stuff up and posted. I'm going to get busy on that right now. I will be back with you as soon as possible. Good to be back in the room. We're going to have some fun this year.